Bandyopadhyay, Group Chairman, IndiTrade Capital. Thank you very much, Sudeep, for joining us here on ET Now. Now, Mr. Bandyopadhyay, absolute mayhem on Dalal Street today, and as has been historically seen, this kind of a fall happens when something major happens, like the Russia-Ukraine war or the COVID-19 pandemic. And this kind of a fall that we are seeing was completely out of syllabus. So, do list what were the key triggers aside from Trump's tariff threats this time around?
Well, of course, this was the Trump tariff-related, issue. But look at it this way: the entire world markets had significantly come down. There was this kind of a bear grip on the world markets today, and India also participated in that. So this was not anything to do directly with India. This was a part of the global meltdown which we witnessed today. A couple of things I must point out here. One is, of course, the incremental 10% tariff on Chinese products announced by US President, as well as the renewed threat of levy of duty on Mexico and Canada coming into effect from 4th March, had the market really panic once again. And that led to this kind of a correction. Of course, the domestic internals aren't great. And we know that corporate results haven't been anything great. GDP also, there was a distinct slowdown. Of course, today's numbers will be a bit of a relief, shade lower than the market expectation, but definitely better than 5.4 announced for the previous month. And also one must remember that this 6.2 is on a higher base. So I think the initial green shoots are probably visible, which should I expect encourage the market a bit more on Monday morning.
All right, so you're expecting that the sentiment will be better on Monday morning, but talking about a longer term, Mr. Bandyopadhyay, do you expect the sentiment to remain weak for a longer period of time, given that the overall impact of Trump tariffs and most importantly, China's response, these two factors are likely to be seen completely?
Absolutely. I think we are in for a very, very volatile period. And when this volatility will end is extremely difficult to predict, considering the way the policy making has been happening in US since Mr. Trump came back to power as president. So it's going to be an extremely volatile period. That's what I can say. And yes, the bias will be significantly negative for the markets. There are initial green shoots visible in Indian market. As I mentioned, GDP growth is coming back on track. Hopefully, corporate results will be better in Q4. And at some point of time, assuming the monsoon is good, we will probably get back to a much better GDP growth rate. All this will enthuse the global investors who, instead of continuously selling, will probably start again looking at Indian market. But I think all this will be kind of tempered. All this will be, we have to examine in the context of what's happening in the global markets and what's happening as far as these tariffs are concerned. So we will have to keep watching the global scenario very, very carefully, because as things stand today, FIIs have been selling like there is no tomorrow.
Absolutely, and FII selling remains a concern. But Mr. Bandyopadhyay, how should the common retail investor really look at these moves and these gashes with respect to investing in the markets? Is this a good time to perhaps buy in with space? Do you really remain positive on what's your view overall on mid caps and small caps?
As far as retail investors and small investors are concerned, what we have been advising them is to be, start nibbling into the market. Today's correction was really, really sharp. And after that, we are very close to the yearly low. The lowest the market reached was on 4th of June, the day the election results started coming out, 4th June 24. And we are very close to that level. And, the market is looking oversold, and there may be some amount of recovery coming in the near future, as I was mentioning. Probably we'll see a bit of recovery on Monday, unless the US markets and the global markets really turn bad tonight. Now, considering this and considering that there is significant volatility going forward, my advice to retail investors have been that start picking up good quality stocks in installments. Don't put all your money to work immediately. Maybe there is more correction, maybe there is more volatility in the near future, but You can't wait for, predicting the bottom of the market. Nobody can do that. So start picking up good quality stocks. Now, as far as stocks are concerned, my suggestion will be to focus on large cap stocks as opposed to mid cap and small cap. There are a few reasons. One is, I think, large cap stocks, valuation wise, are looking attractive in pockets. And I think the possibility of these stocks recovering faster is much more compared to mid cap and small cap. As far as sectors and companies are concerned, BFSI continues to remain a favorite. Remember, we are in an interest rate reduction cycle, and when interest rate starts coming down, I think BFSI does well. So I expect BFSI to do well, and large private sector and public sector banks can be looked at for investing. Also, we believe that Indian infrastructure spend, infrastructure construction spend is going to be significant. The momentum which was kind of reduced will pick up again and has started picking up. So cement demand will keep moving up. Cement companies have performed in spite of demand being weak in the last 2 quarters. We expect demand to start becoming robust and their performance will improve. So cement is one other pocket which can be looked at. Finally, pharma and chemicals. Now, as far as pharma is concerned, we believe that domestic focused pharma companies can be looked at because, the tariff issues will not affect them. And there is a 25% CAGR on domestic pharma. So domestic pharma is a good place to be in. Also, you can look at pharma companies having manufacturing facilities in US. There are few Indian companies which do have, and you can look at that. Specialty chemicals and chemicals is one segment of the market which has been underperforming grossly over the last 2 years. But now with what is happening on the tariffs, I think things are looking up and green shoots are visible. This sector also can be looked at.
All right. So according to you, Mr. Bandyopadhyay, BFSI, the banking space, infra space, pharma space, and of course the cement space, these sectors could be looked at by the retail investor. Of course, like you said, all eyes will be on the markets when they open on Monday on the back of the GDP data that has come in. On that note, thank you very much for joining us and sharing your thoughts on where the Indian markets are headed amidst the deep gashes that we've seen in the markets today.